PepsiCo has been a really choppy trade, had a good couple years, but it's kind of been going back and forth. I'm reading some of the stuff on PepsiCo. It seems like the consumer's kind of making different choices at this point, but what kind of data do you have? Because it's basically flat on the year.
Yeah, it is. Actually, if you kind of zoom out a little bit, like a 3-year chart, it's very range bound. It broken up trend, and now it's kind of range bound, and we're sort of near the bottom of a range, even though we're up maybe, I think, 3 points from the last earnings report. And on that earnings report, I mean, they talked about how the consumer's weaker. There's weaker demand for both snacks and drinks. Especially in North America, the global market is looking a little stronger. They lowered their expectations from at least 4%, which the CEO said basically what meant 5, down to 4% growth on a year-over-year basis. And it's really all about, the consumer looking for value. And if you think about, what they sell, they sell drinks, they sell snacks. These are not necessities by any means. I mean, we're not talking about the price of chicken breasts or steaks or potatoes, things like that. I mean, you can go without pretty much everything that Pepsi makes, right?
All right, so, yep, we're going to stop it right there. And what he said is exactly what I want to get into. So let's make this clear right off the jump, right? There is only one contender to stand up to Coca-Cola throughout the history of the Cola Wars, right? PepsiCo is the number one contender to Coca-Cola's beverage empire, and it's not close. So what's going on then, right, with Pepsi, and why are we looking at such a fall off in their stock price over the last few years? Ladies and gentlemen, we don't need to drag this one out. Let's get right to it. Reasons why PepsiCo has seen a decline in their stock price. Let's start with the most obvious one. He touched on it a little bit here. It starts with an I and ends with an N. Everybody say it with me. Inflation, inflation, inflation. If you thought you were alone in feeling the effects of everything costing more, you were not. Okay, I promise you. With the cost of goods and services increasing across the country, that also meant that companies were, quote unquote, forced, I want to say that with quotation marks, forced to increase the prices of their products. And when you price gouge struggling Americans who are already having to find ways to cut costs, then they don't want to hear about how a 6-pack of Mountain Dew is going to cost them $2 more, right? They don't want to hear about all of the extra costs that you have to infuse into your products in order for you to meet your bottom line, right? So that's A. B. PepsiCo snack products, which account for a massive portion of their sales, have also seen the same increase in costs, right? I can't be the only one that was appalled to find out that one large bag of Doritos is $6. It's insane. And when you couple that with the fact that their Quaker Oats food brand had a large, massive number of recalls to deal with throughout the year, then it only compounds their sales figures problems, right? So that's B. Lastly, C, product competition. PepsiCo and Coca-Cola, for that matter, they're not the only kids on the block anymore, right? When it comes to snack foods and, offering a consumer value to consumers, and, it's heavy competition out there. In fact, the snack sector is one of the most competitive markets out there in terms of business competition. And when you have that many companies that have their hands in the pot, then your sales are bound to suffer from those other companies pulling away parts of your customer base, right? Now for the good stuff, okay? It's not all going to be negative, I promise. Why invest in PepsiCo now? Well, let's start with the basics. 1, their stock price has seen a significant pullback in the market over the last year. They're down 13.5%. At the time of this recording, they are down 13.5%, which indicates to me and to others that there's a strong chance that this is the time for a buying opportunity at a lower price. Number 2, despite the dip in revenue growth and a fall off in volume from sales and foods, they're still showing a strong revenue return. Their year-over-year return for 12 months ending in September of last year revealed that they made over $91 billion. Ladies and gentlemen, that's a capital B. Number three, their dividend history chart dating all the way back to 2016 looks absolutely amazing, okay? Currently sitting at a yield of 3.74% and having grown their dividends for the last 53 years makes them a dividend king. Their dividend is one of the strongest values that you could possibly obtain when purchasing Pepsi stock right now, okay? Listen, ladies and gentlemen, this is a company that has a wide moat, that wide moat that Warren Buffett talked about in his seminars. This is a company that is proven, a company that despite the competition and inflationary economy has found a way to maintain their dominant form. They're a company that knows what they are doing, which is why I agree with the analyst forecast for this one, for me anyway, and I'm throwing money at PepsiCo today to buy up some of that dip, okay, and buy some of those shares at the price that it currently is today. You all have to do your Googles and your researches, right, to decide on what you have to do for your own portfolios. If you own shares of this one, drop me a comment down below. Let me know how this investment has performed for you over time. People say, why buy PepsiCo when you can buy Coca-Cola stock? And I say, why not own both? Why not own both? I want the best of both worlds, right? And PepsiCo does offer some things that Coca-Cola doesn't. So, you know, I'm a person that I own Coca-Cola stock as well. Again, you all have to decide for yourselves if this is a good time for you to throw your hat in the game and purchase some of this PepsiCo stock after it's been down for 3 years, and maybe you want to capture some of that growth potential on the upswing when this company somewhat returns to form, right? But anyway, listen, short and simple, that's going to do it for this one. Make sure you invest diligently, but more importantly, invest responsibly, and I'll see you all in the next one. Thank you for watching. See you all later.